Hey everyone, welcome back to the channel and another video in automated trading and trying to get an expert advisor to do a lot of the heavy lifting for me and make some regular profits on the accounts. Before we get going, please can you hit that subscribe button, give us a thumbs up and comment down below on what you'd like to see extra in the automated series. So today I want to take a look at money management, which is key to all the things in trading and especially when dealing with expert advisors, which is basically trading on your behalf, often when you're not around. So you want to have confidence that you've set up in a way that it's not going to go and blow everything on one trade while you're away. So there's lots of things we can do for money management within the parameters with the programming language. We can either specify a fixed percentage based on the account size, or we can do a fixed number of lots, or we can use what they call a martingale system for managing trade sizes. Martingale is very popular on a lot of the robots you can actually buy off the shelf because it gives a very nice equity curve, providing the actual strategy itself has a fairly robust and positive outcome. But what it also has a potential to do is blow the account very, very quickly. I'll explain how it works. Now, what you do is when you start off with a trade, you go on with a certain size, and if that loses, you then double it onto the next trade, and if that loses, you double again and double again. Theory behind it is that eventually the one trade will win, and because it's been doubled so many times, that will offset against all losses. So an example, if you get down to your fifth trade, the doubling effect, that would be 16 times the original trade you had done, and the cumulative effect would have been you've got 15 times the loss on the previous trades. So effectively you'll be at +1 overall. So if you look at the martingale in a percentage terms, if you started off trading the first one at 0.25%, by the time you get down to the fifth trade, you're at 4% exposure on that particular trade. Now, as we all know, if you're trading with prop firms, they only allow a maximum daily drawdown of 5%. So if that trade goes against you, you've pretty much blown it because the cumulative effect of the previous ones, you've already incurred a significant loss. Now, if your strategy is not as robust and it goes on 8, 9, 10 times, then that would literally blow the account out of the water 100%. Now, I have used the martingale in the past, so I know it does work. And I was starting off a lot size of 0.01 lots. So by the time it was getting up to 4 or 5 losses in a row, it was still only around about half a lot. So the actual exposure was still really, really low. That's why I was quite confident on doing that one. And all the strategy testing did actually show it was going to be reliable over a long period of time. But for the advisors I'm going to now start programming, working on the funded accounts, I'm not going to be using martingale at all. I just don't think it's the way forward. So let's hop into the tool and have a look how easy it is to do money management in EABuilder. So here's the money management tab within EABuilder, and as you can see it's fairly straightforward where we can have a fixed size of number of lots per trade, and also we can change that if we wanted to go a lot smaller or bigger. We can go on position sizing, and therefore it will scale up the lot sizes per size of the account. We can work on a risk percentage per trade, which is what I prefer to do. We can go through martingale if that's what we believed. If we had a very high probability of an outcome, then this would possibly be an option. But as I said before, if you've got market conditions going against you, it can very easily get to a point where you start blowing the account. So I'm going to go with risk percentage per trade of 0.5. Now if we look at where this has been trading on the account itself, we can see the support and resistance that are still drawn in from Friday. And as you can see, price is broken down through that level of support. So if I extend that line out, we can see that round about about 5 o'clock on the chart, which is 3 o'clock UK time, price did break down through that line, and therefore went into a sell. And I'll see as price broke back up, it's triggered again, and then came all the way back down and hit take profit. Now on this account, which is a £70,000 account, 0.5% would equate to £350, and on a 25-point stop loss, that is £14 per point. And that just shows why we've got a lot size of 1.4, and I see that we've got the profit being 14 times 30, which gives us 420, less a bit of the commissions. And as previously discussed, this particular setup, every time it breaks down through the price, it does a trade. And obviously if the price comes back up, it breaks it down again, does another trade. So that's why I had 3 trades this morning on this particular setup, whereas I only expected to have the one. That's when I need to do more fine tuning, as well as also setting some time constraints and time limits. So we actually don't trade in the early hours of the morning when there's low volume and potentially price moves are not what we're looking for. Hope you've enjoyed this quick update on the automated trading, and I'll be doing a lot more in the future, how we can actually develop and build our strategies and get really robust systems to be able to do all the calculations and a lot of the work for us. See you again soon. Cheers.